If you're saving for a home, as far as the down payment, you're asking yourself, do I save it in cash or stocks? The simple answer is there's no yes or no. It all depends on your risk, your timeline, and how flexible that you are with your savings strategy. I'm going to break it down in this video. Hi, I'm Conrad Mazeika. I'm a former financial planner, and I'm a current real estate professional. So we're going to talk about whether investing in stocks makes sense as far as a strategy on saving or down payment. The answer is not very simple. It's going to come down to a couple different strategies on there. So let's talk about it when it absolutely makes sense to use stocks as part of your savings plan on a down payment. Let's get into it.
The biggest problem that people do when they're trying to save for a down payment on a house is treating the investment strategy exactly like a retirement plan. Now, with your retirement plan, you can take the biggest risk possible if your time horizon is very long. And people that are generally first-time home buyers have that condition in their head of saving for long term. That's a big mistake. The time horizon that you need to consider is it 1 year, is it 2 years, or 5 years? The longer the term, then the more risky that you can get. Not to say that you can't invest in stocks. You can. It's if you're thinking I'm going to invest years down the line. But with 1 year, 2 year, it's very risky, because if you have a 40% drop in your portfolio with stocks towards saving, then the question is, am I going to wait for another year? Am I going to wait for 2 years? Am I going to wait 5 years? That's a different case. So let's divide it up into three kind of categories: 0 to 2 years, 3 to 5, and 5 plus. If you're going to be looking to buy a home in 1 to 2 years, or months, whatever the case may be, it may not make sense to invest in stocks because of the volatility of stocks as they go. If you're investing 3 to 5 years as far as your timeline, it might make sense. Limited exposure. Maybe you might want to mix it in with some bonds or some cash savings in that period of time. And then if it's 5 plus years, absolutely, you can invest in stocks, and maybe you hit a big one, and then all of a sudden your time horizon, you can close it down. It's important to see what that number is when you're looking at savings. So always kind of look to that number and that goal where you're chasing to. And just a quick pro tip, this is not specific advice. Obviously you need to talk to a financial planner about this. But if you were to invest in stocks, definitely consider in a stock that has real estate as a hedge in far as your growing strategy. Do you have a favorite investment? Go ahead and type it in the comments. And for the love of God, please do not say crypto. That's why time horizon is important, because the longer your saving strategy is, the more risk you can take. And if there's a downturn in the market, in the stock market, you can always recover and get back to the saving strategy again if you have. And that's why time horizon is important. Now, it's not the only reason when you're calculating your saving strategy. What's important to know is if you do have a portfolio, now, not just stocks drop 20-30%. Back in 2008, everything dropped. Bonds, all these different strategies in the market dropped. Question is, are you still gonna continue that? Are you gonna put more money into it? Are you gonna wait for a year? You have to kind of plan your strategies on there. So you always want to ask, when you're getting closer to that time frame, how you want to proceed on there. Ask those tough questions. Would it be okay for me to wait a year? Can I not wait a year? Those are very important questions. If the answer to the question, if you can not wait for another year for a downturn in stocks to save and have that down payment on a home, then the answer is no. Don't invest in stocks if you're thinking, I can't do it. Risk tolerance and risk management is not just about when the good years are happening. It's when you're comfortable with the downturns when you're investing. One strategy that is very important towards savings, towards a goal, and especially when it comes to a down payment on a house, is divide it up into buckets. You can have a bucket of short-term investments, so cash, T-bills. T-bills are bonds, and those come up maturing in about less than a year. And then in the middle section, you have your little bit medium-term cases. So you can invest in longer-term bonds, something that's 1 to 10 years as far as the security in that bucket. And the longer-term bucket, you can have stocks and higher risk investments. So you can diversify that strategy, and as you're getting closer to that down payment, you move that into the shorter term. That's one great strategy, that as you get closer to that down payment, you put it all in there with your down payment. And that way you have that bundle ready to go. So if there's a downturn in the market, you're not worried about it. What I don't recommend is putting all your down payment saving strategy into stocks. It's a very risky strategy. The stock market does not care about your saving strategy. It only cares about what the current economic conditions are. So have a strategy in place, and it's not going to be ready for you. You have to be ready for the timing in there and plan for it accordingly. Especially here in Southern California, Orange County, California, you want to sit down with a financial planner and develop a strategy toward it. I highly recommend it. When you have $1 million homes and you have to have $100,000, $200,000 down payments, sit down with a financial planner and go over a strategy together. Investing in your saving strategy is not about chasing returns. It's about securing the ability for a down payment on a home on your correct time and terms. If you found valuable the video that you just saw, please subscribe. I have more videos coming down the line that are going to help you start from a renter to become a buyer. Thank you for watching.